good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, December 18th, and we got two items here for economic news releases, and we'll start off with the current account deficit for the third quarter. We had previous reporting of a negative $118 billion, basically, more money going out than what we're coming in into the country. And the the newest reporting, the current reporting now is 108 billion. So we got a little bit more of a sharp return. We were able to cut into that about $10 billion, which is nice, but not great, obviously, especially when you're talking that dollar amount. And then next item here is the Home Builders Index for the month of December. We had a 45 reading back in November, and the forecast comes out 47 and it came in at forecast. So this is the highest reading we've had since 2006. So this basically is indicating that the home builders are feeling a little bit more comfortable building more homes. So obviously that's a good sign as they see there's more demand being created for these homes. Now we'll jump over to see what the headline news shows. And right now the stock market's up, so they see the headlines for the home builders, but that was what was forecasted, so that's not really affecting the market. So what's affecting the markets again is more talk about the fiscal cliff and maybe some optimism kind of coming in, where now there's talk that maybe Obama might be conceding a little bit, where Republicans are conceding a little bit, and the newest thing is where the threshold for the income level that needs to be for the higher taxes. Originally they were talking about 250,000 and above. Now they're talking possibly 400,000 and above. So, so that's where there might be some concessions right there. Let's go ahead and take a look at the bond market, see what we got cooking here. So we had a pretty big sell-off yesterday, as we can see right here, which we broke down below the level of the 104.40 or 104.60ish level and sell at 104.44. And now we're having another little bit of sell-off right here and kind of testing the floor of the 104.25 level right now. So this could be a pretty strong level here for us. We may have another bounce here, and I'll kind of show you why. But right now we're having a correction, so interest rates are climbing up a bit. So let's go ahead and take a look at the next screen here. And as we can see, back in around September is when we first came up above this threshold, above the 104.60th level, around in this range, or 104.40ish. We hadn't seen these levels and even touched at 106 middle of September. So these were the best levels we've ever seen on these. Now, when we have these sell-offs here, we have the floors and we have the ceilings, and anytime you keep testing it, it kind of weakens it. So in this scenario here, we had it tested about approximately three times, and the fourth time we finally came through, it weakened enough where the bond market came through. Now we have because we've only been through here, we have perhaps this would be about the third time we've tested the floor right now. For the 104.25 level. So this is going to be an important threshold to hold, so that way we can perhaps maybe make another run up for improvement in the interest rates here. If it doesn't, I would be cautious. We could end up being down here testing the 10, probably in this range or about the mid 103 level here, and have some more worsening rates. Now, there's talk that maybe some of the investors are just getting, even though the Fed is buying more these mortgage-backed securities, but maybe the investors are just getting kind of tired of it. So right now they're kind of concentrating more on this fiscal cliff, or giving more attention towards that. And then you'll also be seeing news on the inflationary and the jobs numbers are going to have close scrutiny, because the Fed basically indicated in their last announcement that they're going to tie the interest rates towards those two indexes, the employment as well as the inflationary numbers. So those will be items that they'll keep. But right now, also, the fiscal cliff is something that's on their minds. That's kind of taking the wheel right now. All right, so interest rates have climbed up over the last couple of days here, and just be cautious if you are floating. Otherwise, we could end up being down this level here very cautiously. So we got to see how this reacts today, if we're able to sustain this and maybe get a bounce higher, maybe get back up to that level, or do we sit in this level, this range here? We do got a few economic news releases like the GDP and such this week. But right now, as we mentioned, the GDP or the fiscal cliff is what's been taking the front seat. All right, folks, thanks again for stopping by. Thanks for watching. I hope you guys have a wonderful day. I will see you guys tomorrow. If you'd like to continue watching these on a daily basis, just stop by mikesdailymarketreport.com and you can subscribe right there in the upper right hand corner. We just send these emails out. We don't share your information, nor do we send anything other than these videos. Have a wonderful day.